Are you considering getting into investing in real estate, but you just don't know where to get started, but you got a little bit of money to work with? In this second of 3 episodes, I'm going to share with you how, if you've got a little bit of money to work with, how you can get started investing in real estate, 4 or 5 different concepts. So make sure you stay tuned for this episode. So now let's transition to the next section, which is you maybe have a little bit of money. You may be that person that says, okay, I've saved up a little bit of money. I have enough for a down payment to where I can buy a piece of property, and I'm ready to do some rentals. So what I would say is when you talk about rentals, there's a couple ways you could do this. If you don't have a lot of money to get started, there are always opportunities. If you look out there, just go to any local real estate source. That could be it could be like your local newspaper, online. There's always going to be rent to own opportunities. And what do you mean by rent to own? So that person owns the property and they are looking for a renter who would like to buy this property at some time in the future. Maybe you're not ready to buy it. You're not sure yet. Maybe you are someone that, okay, my credit's not great yet. I don't have enough for the down payment, but I can get into a rent to own situation that gets me in the property and I now have control over the property. Now, that could be a situation where I rent to own it and I now move into that property and do the house hacking way of doing things. I could, as long as the lease allows me to do this, I could sublease this to someone else for a little bit higher price, to where now I'm asking enough rental to cover my mortgage and whatever I have to pay extra in the rent to own situation. And I now control that property and I make a little bit of a spread between what my renter's paying and what I have. I could also, that might be in the long-term rental strategy, if it's allowed in the lease. Once again, you need to make sure this is allowed in the lease. I might be able to use this property as a short-term rental. So someone else owns the property. I take over as the master lease, so to speak, on that property. And then I turn around and I turn it into a short-term rental. Great way to make a lot of profits, because typically short-term rentals are very profitable. Now, because of 2021, 2022, everybody decided to get into that world, and there's starting to be more and more regulations. So you want to make sure you do a little bit of research about the potential rents that you would get as a short-term rental. Go to Airbnb, find out what other properties are renting for, and then go through that and figure out. And there's some wonderful calculators on BiggerPockets that can help you figure out profitability of a short-term rental to see if this even makes sense. The other strategy that you could use is a midterm rental strategy, very much the way we've talked about it before, using it with traveling nurses. So there's a couple things in that world that you need to understand. With traveling nurses, especially either short-term rentals or mid-term rentals like this with traveling nurses, you're going to have to put up money to furnish the place, and it needs to be furnished nicely. So you need to build that into your budget, that it might cost you $3,000 to $4,000 to go to IKEA and buy some really nice furniture that you could use, or find furniture, whether it's on Facebook Marketplace or wherever that is. But you're going to need to furnish that property because that's what people want and that's where they want to come. Now, a lot of people will then ask me, where the heck am I going to find all these traveling nurses? Do I have to advertise for that? No, there's really 2 places you can go. One is Airbnb. Everybody's familiar with Airbnb. What you typically would do on Airbnb, though, is instead of saying that it is a short-term rental or available for short-term rental, what you want to do is put in there that it's a minimum of a 30-day stay. That knocks out all your short-term rentals, and it's going to be your longer-term rentals. That's where you're either going to be able to find people that are traveling nomads, maybe somebody that was a digital nomad. They live all over the world. They rent a property for at least 30 days, maybe more. They want a furnished property that's got internet and all the bills paid and everything else. So all they have to do is just literally write a check to you for the property. Traveling nurses, the best way to find them, Airbnb is one way. The other one, and this is probably the best place, is a site called www.furnishedfinder.com. That site is where all the traveling nurses go. You need to learn a little bit about the site. You need to have really good photos taken if you're going to do this. Make sure it's laid out nicely, because that's what somebody's looking at. And about 85% of nurses are female. Think about that when you're decorating a property. You don't want to make it too overly girly, but you also don't want to make it look like a man cave either. It needs to be something that's visually pleasing, looks like a place where they can spend basically 3 months. The second strategy was something that I learned from one of the founders of BRRRR, Brandon Turner, is what's called the BRRRR strategy. So you've heard of fixing and flipping probably a lot of times. Fixing and flipping can be a bit of a risky gamble, because you've got to be right on a couple things. One, you've got to be right on the price that you're paying for the property. And you also have to be right on the amount of work that it's going to take to fix it up to where you can flip that property. And you also have to count on the market being good at the other end of that. So think of somebody that's been in the fix and flip business. In 2021, they were looking like a hero. 2022, the Fed starts raising rates. House prices are still way up. So you're paying up for a property, but now you're paying 7, 8, 9% for a mortgage, or you're somebody else who's buying it is paying 7, 8, 9% for a mortgage. And that put a lot of pause out there, and people had to start discounting their property. So imagine if you didn't get the buy price right, maybe it costs a little bit more to fix up than you were planning on. And then all of a sudden it's not selling for anywhere near what you had planned on it to be selling for. This is a problem. This is a major problem. The BRRRR strategy, which stands for buy, rehab, rent, refinance, and repeat. So that strategy is a little bit more conservative by nature. It follows along the lines of fix and flip, but the difference is you are actually putting in a long-term renter, a long-term or mid-term renter. It would be what I look for. So you got to buy right. You still need to understand that you're buying the property correctly. Once again, if you go to BRRRR, there's wonderful calculators to help you figure this stuff out a little bit, plus a multitude of calculators online, calculators that will help you figure out replace or the fix-up cost and that rehab cost, to make sure that you're buying it at the right price, that when you get a mortgage on it, that you be able to make money from the rentals of the property. So a lot of things you need to look at. Am I buying it? Do I know what my rehab costs are going to be? What's my finance? How much am I financing? And what's the mortgage payment? And then what's the rents from around the area? Okay, do all those work out? Is this a deal I want to look at? Or is this a deal I want to pass off and go on to something else? There are hundreds of thousands of real estate deals available to you, and you don't have to take the first deal. I will tell you, for every one property I buy, I probably look through 100 to 200 different deals, especially in markets like Austin. I do this all over the country, and I look at markets all over the country. And a lot of times I buy these without actually ever stepping foot into a property. I work with a team locally that does all the work and everything else. But if you're starting out, you want to probably do something local to your area. And the Austin area has been massively overinflated for the last several years. And it's very difficult to, one, find a property like this. So you typically have to find one that is really beat up, come in, offer low enough to where it makes sense. Rehab costs have been higher with the pandemic and shortages of materials, everything else. It's been a bit challenging, I would say, to get that rehab cost within a reasonable range. And then rents, the one good thing is rents have been going up all over the city. So that's been okay. You knew you could pretty much support it. Once again, this is another strategy we use with midterm rentals and traveling nurses. Often I'm looking for properties that are in areas close to a hospital, which may or may not be great for most rental properties. Smaller properties I can get into that may not necessarily be ones attractive to other real estate investors. I've even looked at ones that are, 2-bedroom, maybe small 3-bedroom, and it still works because it's larger than an apartment. It's certainly larger than a hotel room, and a traveling nurse is really excited to do that. So you really need to understand your end market and what you're looking for, and then look for the types of properties and the locations that's fitting for. If you target families with kids, where do you want to buy? You want to get close to schools. You want to be in a place where it's easy access to schools and groceries and everything else related to having a family. The last area is real estate investment trusts. This is an area that I think real estate investment trusts are an area, both private real estate investment trusts and ones that are traded on the markets, are wonderful areas where you don't really have to do anything. Now, understand with REITs, most of the other properties that we've been talking about, there are some tax benefits for an investor. Wholesaling is one exclusion to this. There is no advantage from a tax standpoint. It's all taxable, everything you do. But in the case of most other investments, you have depreciation, you have amortization on the mortgage loans, meaning if somebody's paying your mortgage for you, that's reducing the balance every month. So that's called amortization. So that's another way you make money because it reduces your debt. In this case with REITs, there really is no benefit to them. They're ideally held if you have some type of a retirement account. There are tons and tons of REIT funds. There are private REITs that are available. These are things, the publicly traded ones, I would say typically they're going to have a little bit higher income level to them than, let's say, a dividend paying stock fund or even a bond fund at this point, because bonds have been, although prices have or yields have gone up, the prices of them have gone down. So real returns in the bond market have been negative. Real estate investment trusts typically over time, because property appreciates, so there's a value of appreciation, but they're also required to distribute 90% of their income, meaning the income that they make, they have to distribute. Otherwise, they'd have to pay taxes on it. So that means it's a taxable distribution directly to you with no depreciation on the property. If you can put it in some type of a tax deferred vehicle like an IRA inside of a 401k, anything like that, even potentially an annuity, those real estate funds can actually reduce it. If you have a little bit of money to work with and you can get into a private REIT, so something outside of the typical brokerage sold US market type of a REIT, these are private REITs where you can actually get in, be part of that fund. Typically those pay a little bit better. They're going to be up in the 10 to 11% range, and gives you a lot of opportunity there. Another couple of areas that I would consider if you're looking in this same kind of area, in the REIT area, there's a couple of opportunities on the internet now. One specifically is groundfloor.com. And once again, look down in the show notes and there's a link that will take you directly to Ground Floor. And if you follow that link, you, I believe, get $50 credited to you if you set up an account with them. It's a benefit for going there. Ground Floor invests in, it basically provides peer-to-peer loans for properties that are doing rehabs, fix and flips, fix and rent, BRRRR strategies. This is provided by Ground Floor. They find the people, they put together the deals. You can come in and micro invest in those deals. You're investing in debt. Most often those deals, you can choose your risk level, and the risk level, it's like an A through D risk level. A's are typically around 10% total return. D's are around 14 to 15% total return. There is really no movement in these because they're not publicly traded. What you're waiting for is you're loaning money into a deal and you're waiting for that person to complete the project. And then from there, they refinance the property or they sell the property, they pay off the debt that's on the property. When that happens, you get your funds returned with the dividend attached to it, or with the interest attached to it. You have the opportunity at that point to then reinvest more into those pooled investments. Great ways to make money and not really have to get involved in real estate. The other one is called Fundrise. Once again, look down below in the show notes and you'll find a link to go to that. Fundrise, I believe, also offers $50 to salt your account. All of these things can be started with very little money. And Fundrise is what's considered an e-REIT. So you're basically investing in different pools of commercial and residential investments where you're not buying one individual property, or you're not investing in this innocuous publicly traded fund. You're investing in very specific pools of properties. You get to see exactly what's in those pools. And you can, depending on how much you invest, there's more opportunities for different types of pools as you invest more and more money with them. It's another opportunity to effectively not have a whole lot of work. Typical returns are in that 10% range too with Fundrise. There's opportunities on both ground floor and Fundrise also to invest in the companies themselves, in IPOs of the companies themselves. Lots of opportunities to make money on the real estate side with not a whole lot of work. I hope you enjoyed the information about real estate investing. If you've missed any of the episodes that we've done so far, or you want to go back and watch them, just go down to the playlist, the Freedom Engines playlist on our YouTube channel, and all of them are there.